So this was actually a slightly earlier version. The final numbers are in the last slide. They didn't change a lot. They just changed a little. This was a draft that we had, and I only finished the final projections a couple of days ago. So but you can see that we have the same methodology for both potential and projected production. The projected is what we actually think is going to happen. The potential is if everybody does what they say they're going to do and nobody does something that they don't say they're going to do, then that's what the potential is. And you can see that we've got some projected production of over 4 gigawatts in 2010 and over 9. I think that number is now 9.6 in 2012. But the potential is much higher, especially if some of the economics work out. I mean, think about how fast First Solar has rolled out manufacturing capacity in the last year and a half. Every quarterly call, they tell you how much money they made beating expectations and how many more megawatts and plants they're going to build. So I can't keep up anymore. This is another way to think about the projected production by technology type. And because of the sheer number of amorphous silicon manufacturers and the orders that they've put in, they'll probably do pretty well. The real-world production economics out in 2010 and 2011 will really dictate a lot of how the production goes in 2012. But time will tell. There's also an interesting change so today, nearly all of the stuff, or the vast majority, is in glass-based modules, which has certain applications that it can go into, but it's not well suited to other flexible or building integrated, or in some cases it can be, but flexible substrates allow for the potential for additional packaging, and you can see how much production is coming in with the potential to be used in flexible substrates. You can also see how many companies are coming in. If the number of companies above 5 megawatts, meaning above pilot line, and into commercial through 2012, we show that 20 companies will cross the commercial threshold each year for the next 3 years. So that means that one company every 2.5 weeks for the next 3 years will achieve commercial scale production in thin film. That's stunning. And only some 10% of them have to be right, but have an offering that meets or beats First Solar's offering for this market to literally just explode. And what we show is why it's such an attractive offering. Today, CAD-TEL is so much cheaper than some of the other solutions and pricing below what would be the IRR equivalent line. That line shows the relationship of where you should be theoretically and financially independent. If you had no space constraints, you would be, you wouldn't really care which technology you used as long as the price was somewhere on that line. The trade-off, there's a little bit of a trade-off for those of you that haven't heard it before. It's about 10 cents per point of efficiency differential at the module level. So if you've got a module that's 5% more efficient than someone else's, you should theoretically be able to sell it today at about 50 cents a watt better average selling price. That number will come down as balance of systems cost comes down over time, and by 2010, it's down to about 7 cents per point of efficiency differential, maybe a little less. Costs come down, prices come down, and and efficiencies improve. So all this available supply is moving down and to the right in terms of its cost, and therefore improving the value of its offering. How are they getting cost and improvements? This is from First Solar. SunPower has an equally wonderful chart trying to break out the way that they're going to achieve cost reductions. Some of it's through improvements in efficiency. Some of it's through cheaper manufacturing locations. Some through plant scale and improvements in throughput. But First Solar suggests that their cost per watt is going to drop from here, where it was $1.25 per watt, to about half that in 2012. I tell you, 65, even if it was 55%, a 68-cent, excuse me, cost of full module manufacturing is a pretty hard value proposition to beat. Here's another way to think about the earlier charts we've in this latest thin film report. we've broken out the cost components in a little more detail. And this is my favorite chart. I spend lots of time trying to think about the implications of this in a competitive world where there's oversupply, that most of you believe is coming eventually. How do you get into competitive pricing in gaming in order to capture market share? And some of this needs to be broken out by different applications. How is this different for placing modules at the utility scale or the rooftop commercial scale in situations where people are space constrained, in situations where people are trying to maximize the return on their investment versus where they're trying to maximize the amount of net dollars they can create from their available rooftop space? All kinds of really exciting things about the competitive dynamics, but let's figure out when and how the oversupply is going to happen first. Here's just a chart of the capital cost to build new manufacturing plants, which shows that thin film does have some advantages as well in that manufacturing. By the way, short answer to the question, where does it all end up? We think that there's a real advantage to either being the lowest cost producer or the highest value producer. And we think that the economics play this out, that you either want to maximize the return on investment, which would mean that you're probably going to be down at the low cost part of the segment of the market. You're going to want to maximize the net present value of a project, which means you're going to be at the high value portion of the supply chain. Here's the final numbers. I know you've all absorbed that, so now. All right, good, you're awake. This is where you add up the polysilicon supply. This is from earlier charts, the final numbers. This is our thin film supply forecast, the final that we're just publishing next week. And you get to a total silicon and thin film module availability of about 5.5 DC gigawatts in 2008, but climbing to nearly 15 in 2010. Just the sheer weight of the polysilicon plants coming on, the sheer weight of these thin film manufacturing, of which it'll be 28.5% of the total available supply. It doesn't look like the growth in available supply numbers are correct, so I'll have to go back and change that. But you can see that they nearly double, and then they grow by 50%. And then there is some tapering off out here, but that's partly methodology and partly how we believe that some absorption has to occur out here, and capital might slow until winners. If the eventual winners are sort of determined out in those later years. So that's the supply. Now we have to start adding up the demand and figuring out where this is going to go and at what prices, because like I said, it's supply and demand and price are the interrelated pieces. And I am just as curious as you are to find out how that story plays out. So let's get to it, but thank you for your attention. I hope it was useful.